Good evening, sir.
Good evening, sir.
Our last class was on capital gain tax. We couldn't finish capital gain tax when we start this topic. So we continue from where we stopped the last time. So because of the orientation, so we couldn't hold lecture last week. So we are on capital gain tax. We have defined capital gain tax. We have looked at the basis of assessment of capital gain tax. We have also looked at the administration of capital gain tax. We have looked at persons liable to capital gain tax. Our last class, we also talk about concept of disposal. Under the concept of disposal, we look at specific circumstances where disposal is deemed to have taken place. We look at that. We also look at allowable expenses and disallowable expenses under the capital gain tax. We look at that. We compute capital gain. We look at the filing of capital gain tax return, penalty for late filing. We look at that. Computation of capital gain tax. How do we compute capital gain tax? We look at that through last week. So after that, the other area we look at partial disposal of fixed assets under the capital gain tax. When a fixed asset is disposed partially. So this night, where we are going to look at this night is capital gain tax and hire purchase transaction. Capital gain tax and hire purchase transaction. Capital gain tax and hire purchase transaction. That is what we are going to look at today. And we are going to look at rollover relief too. Rollover relief. Let's start with capital gain tax and hire purchase transactions. When we look at, when we talk about hire purchase transactions under capital gain tax, we can divide it in two ways. We can classify it in two ways. First is when you acquire an asset under hire purchase transaction and that asset was later disposed. Capital gain tax and hire purchase transaction, like I said, we can look at it in two ways. Firstly, when an asset is acquired on hire purchase and that asset was later disposed. In that case, dispose an asset class. When you acquire an asset, initially, that asset you acquire it through hire purchase. And you now dispose the asset, you make a gain. How do you pay capital gain tax? The bone of contention in this situation, in this first situation is, what cost of acquisition are you going to recognize as your cost of acquisition? Is it going to include hire purchase interest or only the cash price? So when you acquire an asset on hire purchase, you later dispose it. The challenges in such transaction is, what cost are we going to recognize as cost of acquisition? Is it the hire purchase price or the cash price? We are going. So is it the one we are going to recognize as the cost of acquisition? So that is the bone of contention. Now, when you acquire an asset on hire purchase, maybe after you finish paying the installment, you dispose the asset. if you want to calculate the capital gain tax on the assets, it's going to be the sales proceed less the cash price. Under capital gain tax, interest is not recognized as part of cost of acquisition. Under capital gain tax, interest is not recognized as part of what? Cost of acquisition. We don't recognize interest. So when the cost of an asset includes interest elements, that interest element, you are going to remove it. So it is only the cash element you recognize as part of cost of acquisition that you are going to deduct from your sales proceed. So when you acquire an asset on hire purchase, maybe after you finish paying the installments, you dispose the assets. It is the cash price you are going to recognize as part of the cost of acquisition. Or before you finish paying the installments, maybe you want to pay 36 installments and you have paid 24 installments, you now dispose the assets. It is the cash installment you are going to recognize as part of cost of acquisition. You are not going to recognize the interest element because that interest element is not allowed under capital gain tax transaction. That interest element will be treated as an allowable expenses in determination of your assessable profit under your personal income tax or your company income tax or your petroleum profit tax. So that is the first angle on capital gain tax and hire purchase transaction. The second area that relates to capital hire purchase is when you sell an asset. You sell an asset and you sell the asset on hire purchase transaction. That means you dispose the asset on hire purchase transaction. You dispose the asset on hire purchase transaction. If you dispose an asset on hire purchase transaction and the installment period is more than 18 months, when the installment period is more than 18 months, in that case, the capital gain tax too is going to be recognized based on hire purchase. That means the capital gain tax too, you are going to pay it on installments. You are going to pay the capital gain tax on installments. Since the buyer of the asset is paying on installments, you, the seller, that you make a gain on that asset, when the installment period that the buyer is paying is more than 18 months. Do you understand? That means the capital gain tax due on that asset too, you will not pay it in a lump sum. You are going to pay it on installment basis. You are going to pay it on installment basis. So if the buyer of the asset is paying for 3 years, you, the seller too, the capital gain tax due on that asset, you are going to pay it for 3 years. So when we talk about capital gain tax and hire purchase transaction, we look at it in two angles. First, when you acquire an asset on hire purchase, you later dispose the assets. Second, when you dispose the asset on hire purchase, you didn't acquire the asset on hire purchase, but you dispose the asset on hire purchase and you make a gain. How do we compute the capital gain tax? In that case, the capital gain tax will be paid on installments, provided that the installment period is more than 18 months. provided that the installment period is more than what? 18 months. In that case, the higher purchase, the capital gain tax too, is going to be paid based on the number of installments. Do we understand? Do we understand?
Yes, sir. Well understood, sir.
So let's look at illustration. Let's look at illustration. Oh yeah, example 3. Somebody can help us read the example 3.
Union Company Limited, a chargeable asset, purchased a chargeable asset on hire purchase. The deposit paid for the period was 250,000. The balance of the purchase price was to be paid in 36 month monthly installment of 25,000 naira. The cash price of the asset is 790,000. Calculate the capital gain tax due, assuming the asset was sold as follows. Hello?
Yes, I can hear you.
Let me go for as follows. A, for 1.25 million after payment of 24 installments. B, 1.3 million after full payment of all the installments.
Thank you very much. So let me just open an Excel so that I have the solution there, but let me open the Excel solution for us to understand better. For us to understand better, let me open the Excel solutions so that we can solve it. We can solve the question from the Excel solution. Union Company, they purchase an asset on hire purchase. So while looking for the Excel template, let me start explaining it from the word. So I will still check the Excel template so that I can send it to you. This company, they purchase an asset, a chargeable asset on hire purchase. They paid a deposit of 250,000, and the balance of the purchase price is going to be paid on installments. And for how many installments? For 36 installments. And that 36 installments, they will pay 25,000 per installment. The cash price of the assets is 790. Ladies and gentlemen, they said we should compute the capital gain tax, assuming the asset was sold, assuming the sales proceed was 1,250,000 after payment of 24 installments. This question A, they said after he has paid 24 installments, that means this company, they dispose the asset before they finish paying all the installments. They have not paid all the installments finished before they dispose the asset. That is question A. Question B, after payment of full installment, that means they have paid the 36 installments. So let's start from question A. Before you can solve this question, first thing you need to get is for you to get the interest element. is for you to get what? The interest element. In this question, how do we get the interest elements? How do we get the interest elements in this question? So for us to get the interest elements, the higher purchase price minus what? Minus cash price. The higher purchase price minus cash price, it will give us the interest elements. So once we get the interest elements, we can also get interest per installment. If we want to get the interest per installment, what we need to do, that total interest that we get, we divide it by number of installments. In this question, what is the number of installments? What is the 36? So the total price that the total interest that we get, we divide it by number of installments. So let me just, for better understanding, let me share an Excel template for us to calculate the interest elements. So on this transaction now, if you want to calculate the interest element, higher purchase price, less what? Cash what? Cash price. Do we understand? So in the question, what is the higher purchase price? What is the cash price? In the question, what is the higher purchase price? What is the cash price? Let's go back to the question and check.
25,000.
The higher purchase price, we don't know the higher purchase price yet. But the interest, the cash price is how much? 790,000. Can we see that?
Yes, sir.
790 is the cash price, Abi?
Yes, sir.
Yes, sir.
Now, our higher purchase price, we can get our higher purchase price by ourselves. How do we get the higher purchase price? Deposits. How much is the deposit?
250,000.
250,000. Total installments. After the deposit, they said he will be paying installments. How much is he going to be paid per installment?
25,000.
25,000 for us to get the total installment times how many? Times what?
36.
36. So the total
900.
installment is 900. That means the higher purchase price, HP price, is going to be 250.
1.150.
Abi?
Yes, sir.
1.150.
Yes, sir.
150.
So our cash price is how much? 790, Abi? So that means
Yes, sir.
our higher purchase interest is going to be what? 360,000. That is our higher purchase interest. Second question is, we need to get interest per what? per installment. Interest per installment. How do we get the interest per installment? 360,000, Abi? Divided by what is the number of installments? 36.
36.
Can we all see that?
Yes, sir.
That means for every installment that he paid, how much is the interest per installment?
10,000.
10,000. You understand? Now, the next thing that we need to look at is, since we know the interest per installment, we need to get cash installments. Cash what? Installments. Every time he's paying an installment, you normally pay installment of how much? Installment
25.
of
25,000.
25,000. 25,000. That is the installment he normally paid. 25,000. On this 25,000, how much is the cash installment? Cash installment will be how much?
15,000.
15,000.
Cash installment will
15,000.
be 15,000 because you remove interest. You will remove interest from it, Abi. That means the installment he paid every month minus interest every month. Abi, you get?
Yes, sir.
That means every time he's paying installment every month, cash price out of that 25,000 is how much? 15,000. See, when you are done with this working, you can solve that question. Now, first question said we should calculate the capital gain tax after payment of how many installments? 36 installments. Let's go and compute the capital gain tax after 36 installments. After 36 installments, let's go and compute the capital gain tax. Union Company Limited. Computation of capital gain tax. So after first question, after 24 installments, sorry, after 24 installments. First and foremost, after 24 installments, if you want to get that, the sales proceed, the sales proceed after 24 installments, how much is the sales proceed in the question?
1.250.
1.250. Less cost of acquisition. Less cost of acquisition. If you want to get your cost of acquisition under hire purchase, when you acquire an asset on hire purchase, you later dispose the asset. If you want to get your cost of acquisition, when you acquire an asset on hire purchase, you later dispose it. If you want to get your cost of acquisition. First, cash deposit. Deposit first. Deposit total cash installments. You add the two together. You add deposit and total cash installment together. So in this question, how much is the initial deposit he paid?
250.
250. So our initial deposit is 250. You know, they said after payment of 24 installment, Abi,
Yes,
how
sir.
do we get total cash installments? After 24 installments, how do we get it? We know how much is cash installment per month that we get in our working. Cash
15.
installment per month, how much? 15,000, Abi?
1,000.
Yes.
Times, we times it by how many months?
24.
Times 24. Because they say after payment of 24 installment, it will give us 360,000. Let me put this on here so that it will give us 360,000. So 250 plus 360,000 plus 360. That is 610.
16.
That means our cost of acquisition is 6 what?
10.
610. So your capital gain gains is going to be
640.
640. That is your capital gain. So your CGT, capital gain tax, at 10%, Abi?
Yes, sir.
At 10%.
64.
Times 10%. That is
64,000.
64,000.
French, you don't read and finish.
So do we understand that?
Yes, sir.
Yes.
So second question said second question said we should compute the capital gain tax, assuming the asset was disposed for 1.3 million after payment of what? After full payment of all the installments. After the full payment of all the installments, we should compute the capital gain tax. That means after they have paid 36 installments, we should compute the capital gain tax. If you want to do that question, what you need to do, you can use this first step. The sales proceed after we are asked to compute the capital gain tax after the payment of full payment of installments. The asset was disposed 1,300,000.
300.
1,300,000. So after the payment of full installment, the full installment is how many months? The full installment is how many months?
36.
36 months.
36 months.
So what you need to do, That cash installment of 15,000, you times it by what?
36.
You times it by 36. Another thing you can do when the installment is fully paid, when you pay the full installment, if you want to compute the capital gain tax, if you don't want to use this method, and you were told that they have paid all the installment, just say sales proceeds minus what? Minus what? After all the installment have been fully paid, you want to compute the capital gain tax, the asset was sold. Sales proceeds minus cash price. Minus what? Cash price. If you look at the question, how much is the cash price?
790.
790,000.
So when the installment is fully paid, 1.3 minus 790. Since all the installment has been paid, sales proceeds, your cost of acquisition, when all the installment have been paid, your cost of acquisition will be what?
790.
Will be the cash price. Will be the what? Cash price. Your cost of acquisition will be the cash price when all the installment have been paid. Let's go to this example. You will see. Look at how we solve it. When we use this method, deposit, total cash installment. What do we still arrive at?
790.
This 790 represent what?
Cost of acquisition.
Yes.
For cash.
It represents the cash price. In the question, the cash price is how much? If you go to the question, let me show you the question. You will see the cash price is 790.
It's 790.
So the cost of acquisition still remains the cash price when all the installments have been fully paid. So 790 minus 1.3, you get 510 at 10%, 51,000. Do we understand? This is the first example on capital gain tax and hire purchase transaction. This one is when you acquire an asset on hire purchase, you later dispose the asset. Let's look at another example when you sell an asset on hire purchase. You didn't acquire an asset on hire purchase, but in this case, you, the seller, you are the one selling that asset on hire purchase. You now make a gain. Like I said, if the installment period is more than 18 months, the capital gain tax is going to be paid based on the number of installments. Assuming the buyer want to pay the installment for 3 years, you too, the seller, if you want to pay the capital gain tax, you pay it for 3 years. You will not pay the capital gain tax at once. Let's go and look at that example.
So, sorry, I have a question, sir.
Yes, what is your question?
Yeah, this hire purchase stuff, the buyer and the seller, can you clarify buyer and seller? Because I know that what I know is that somebody has an equipment and he gives out for hire purchase. So I just want to know who is the buyer here and who is the seller here.
In a see what we are here, we are saying you initially you bought an asset on hire purchase.
Okay.
That asset, you now later dispose the asset. You make a capital gain.
Okay.
Do you understand? That is the first example I explained, which I solved now. Do you understand?
Okay.
You are initially the buyer. After using the assets for some time, you dispose the asset. Do you understand? The question is, your cost of acquisition should not include the interest element. Because anytime you buy an asset on hire purchase, you will not pay the actual price. You will pay both the cash price and what? And the interest.
Yes.
And the interest.
So that is the first example. The second area that we want to look at now is when you are selling an asset, you want to sell your asset, your car.
Okay.
Somebody, that car, when you buy it, you didn't buy it on higher purchase, so you buy it normal price. But you now want to sell it after using it for 3 years. The buyer now said, my brother or my friend, this your asset you want to sell for me. I don't have money to pay at once, so I will pay for 3 years, so I will pay for 2 years, so that means that person is paying on installments. He's not paying you cash.
Okay.
That is the second example we want to look at.
Okay, I get you now.
Yeah.
I get you now.
So let's go and look at that one. Examinable question 1. Examinable question, no, not question 1. Question 3. Oh yeah, somebody should help us read this question.
Yeah, still on Excel, sir.
Go ahead. Okay. Question 3.
Okay, I'll read. Quago Limited sold a plant to Ozonchi on 31st December 2007 for 5.2 million, which cost 3,250,000 to acquire on 1st March 2005. The sales agreement provided for payment of an initial deposit of 2,080,000 on the day of sale, and the balance of 3,120,000 payable in 3 equal installments on 31st December 2008, 2009, and 2010. Ozonchi made actual payment as detailed below. So the dates and the payments. Ozonchi died, and the balance of 780,000 could not be recovered by Nkwagu Limited as at 31st December 2012. Consequently, the balance was written off as bad debt with the consent of the FIRS. You are required to. Can you please scroll up, sir? Compose the capital gains tax payable.
Thank you very much. This question we want to solve now. Who can tell me the difference between this question and the first one we solved? Who can tell me the difference?
Well, let me try. This one, the seller is selling, and the person buying it is paid some amount, then you will not be paying some amount on installment.
Okay. Okay. The first one we solved. In that case, you buy an asset, you later you buy the first question we solved. You buy an asset on installment, you later sell the asset, Abi? But in this question now, this second one, the seller of an asset is selling to a buyer, and the buyer is paying on installments. So we are computing the capital gain tax for the seller of the assets in this one now. Do you understand? So now, if we want to solve this question, we need to first of all look at the installment period. How many years or months is the installment period?
3 years.
3 years. That means the installment period is higher than how many months? Specified by the law under this hire purchase transaction for the seller of the asset to pay the capital gain tax on installments. The months,
36
the
months.
installment period must not less than how many months?
18 months.
18 months.
18 months.
18 months. 3 years is higher than 18 months. That means if the seller of this asset want to pay capital gain tax, he will be paying on installments. On installment in the sense that he's going to pay part of the capital gain tax in 2008. He's going to pay part in 2009, part in 2010. Ukogu Limited sold a plant to Ozoshi on 31st December 2007 for how much? 5.2 million, which costs 3,250,000 to acquire. That means how much does Ukogu acquire that asset?
3.2.
3.2. So if you want to compute the capital gain on that asset, the capital gain on the asset, how much is the capital gain on the asset? 5.2 minus 3.2. That will give us how much? 1,950,000. How much will be the total capital gain tax that the seller will pay on the assets? 10% of 1,950,000, which give us 195,000. Can we see that?
Yes.
This is the capital gain tax the seller of the asset will pay on this gain that he make, 195,000. But the question is the seller of the asset, is he going to pay this once or pay it based on number of installments? He's going to pay it based on number of installments. How many years does the buyer of the asset pay for that 5.2, this 5.2 million that the buyer want to pay? He didn't pay at once. He paid it on what? On installment. Look at his payment plan. How he want to pay the 5.2 million. He said he want to pay the 5.2 million. He will first pay how much initial deposit?
2.6, Abi, 2.0.
2.08.
2,080,000, Abi? 2,080,000. That is the initial deposit he will pay. After the initial deposit, the balance, 2,080,000 minus 5.2. How much will be the balance?
3,120.
3,120. The 3,120 is going to pay it for 3 years. This 3,120 is going to pay it for how many years?
3 years.
3 years.
2008, 9, and 10. So how much is he going to be paying for every year?
1,040,000.
1,040,000.
40,000. So the examiner even help us. The examiner even show us how much he's paid. In 2007, he paid how much? 2,080,000, which is the initial what?
Deposit.
2008, he paid how much?
1,040,000.
1,040,000.
And 2009, he paid what?
1.04.
Why 2010? How much he paid?
260,000.
Instead of how much?
So of 1.04.
1.04.
1.04. What happened is, in 2010, he has paid part of the 1.4 million, 1,040,000. And sudden event just happened. The buyer died. As a result of that, the balance of 780, the seller cannot recover it. Because the person has already died. You can't say you want to go to grave and go and collect your debt. So now, let's compute the capital gain tax. If we want to compute the capital gain tax, we know that the total capital gain tax that the seller of the asset supposed to pay is how much? 195,000, Abi. This is the total capital gain tax is supposed to pay. But this total capital gain tax is supposed to pay. He will not pay it at once. He's going to pay it based on installments. Starting from 2007, year of assessment. For us to know the capital gain tax the seller of the asset will pay, the installment paid all over sales proceeds times total capital gain tax. How much part of the payment, part of the sales proceeds that this buyer paid in 2007, how much?
2.080.
2.080, Abi?
Yes.
2,080,000. All over, what is the total sales proceeds?
5.2.
5.2. Times how much is the total CGT that the buyers or the seller of the asset supposed to pay on the gain he made? The total capital gain tax, how much?
195,000.
So 195 times 195. If you times it by 195, at the end of the day, you are going to get how much?
So, but sir, hello, sir.
Yes, I can hear you.
Yeah, sorry, sir. Based on this formula now, the 2.80 is an installment payment. It's a deposit payment, not an installment. It's a deposit payment.
Yes, we use it as we use it to represent installment in 2007.
Okay, because okay.
Yes. Yes. We can set, instead of using installment here, we can set slash payment, actual payment made. Slash actual what?
Payment made.
Abi? Actual payment. How much is the actual payment the buyer made in 2007?
That's
2,080,000. Abi?
Yes, sir.
So it's the same thing. Do you understand? Do you understand?
Yes.
So that means the capital gain tax that the seller of the asset will pay in 2007 is how much?
78,000.
78,000. 78,000. That is the capital gain tax he's going to pay in 2007. In 2008. How much is the installment that the buyer paid in 2008?
1.040.
Times all over 5.2 million, the sales proceeds. Times what? 195. 195 is the total capital gain tax, Abi? As a result of that, we are going to get 39,000. That means 2008, how much will the seller of the asset pay to the tax authority as capital gain tax?
39,000.
2009, how much is the installment that the buyer paid in 2009?
The same 1.40.
All over 5.2 million times 195,000. You times it by 195,000, we are still going to get 39,000. So we are still getting 39,000. In 2010, how much is the installment that the buyer paid? How much installment the buyer actually paid?
260,000.
Times 195, all over 5.2. So how much capital gain tax the seller will pay?
9,750.
Instead of how much?
Instead of 36, I mean 39.
Instead of 39. Why did this seller of the asset did not pay 39?
Because the year has not completed.
He's not paying 1.4.
He died.
He's not paid in full
There is no
installment.
more.
1.40.
Because the buyer
owner
did
is
not
dead.
pay all the installments.
Yes,
The buyer
he did not
failed
pay.
to pay all the installments. Do you understand?
He's dead. Yes, sir.
So that is it on this hire purchase transaction. We should know to differentiate between the first one we solve and the second one we solve. Do you understand? The first one we solve, you buy an asset on hire purchase, you later sell it. You do not sell the asset on hire purchase, you sell it the normal price. But this second one, you are selling an asset on hire purchase. You do not buy it on hire purchase. Do you understand? So that is hire purchase transaction on capital gain tax and hire purchase transaction. The next area we need to look at is loss on disposal of chargeable assets, Finance Act 2023. Loss on disposal of chargeable assets, Finance Act 2020 what? 2023. What is the loss on disposal of chargeable assets, Finance Act 2023? We know we normally have capital gain, capital gain, capital gain. What if we have capital loss? Who can tell me a situation where we are going to have capital loss? Capital loss will arise when the cost of acquisition is higher than what?
Sell proceeds.
It's higher than the sales proceed. Do you understand? That is capital loss. This capital loss, when you make a loss, capital loss, are you going to pay tax?
No.
No. But Finance Act 2023 brought some changes to capital loss on the treatment of capital loss. Finance Act 2023 is now saying when you dispose an asset, a chargeable asset, and you made a loss, that capital loss, you can carry it forward for a future year. You can carry it forward and relieve it against any capital gain arising from disposal of same chargeable assets. What I'm saying now is you dispose a motor vehicle, you made a loss. That loss that you made, you can carry it forward to a future year maximum of 5 years. Within that 5 years, if you now dispose another motor vehicle, you make a gain. Do you understand? You make a gain. Before you pay capital gain tax on that gain, you will relieve the loss that you made in the previous year from such gain. Look at it very well. Finance Act 2023 say, loss on disposal of chargeable assets in any tax year shall be carried forward for a relief against chargeable any gain arising from disposal of same what?
Same asset. Chargeable assets.
Assets. You cannot relieve loss on disposal of motor vehicle from a gain on disposal of land. Do you understand?
Yes.
It must be the same assets. Are we making sense?
Yes, sir.
Yes, sir.
And that chargeable loss or capital loss, you can carry it forward for maximum of how many years?
5 years.
5 years. After 5 years, if you do not make any gain, that you relieve that capital loss from, after 5 years, you cannot relieve the capital loss again. That capital loss shall be deemed to have been lost finally after 5 years. Are we making sense?
Yes, sir.
Boluwagi Gabriel, you ask question a lot. So go ahead.
Sorry, sir.
No. It's good.
Since
You need to ask question.
Since this capital loss, you say you cannot carry it more than 5 years, and it must be on the same assets. What of as if it is since it's a company and we have many assets, can't we relieve it from other assets since
the law said
bear the same name?
This capital loss was introduced by Finance Act 2023. It started from Finance Act 2023, which commenced effective from 2004 year of assessment. Before that, before Finance Act 2023 that talk about relief of capital loss, we don't normally relieve capital loss. So if you make a loss on capital loss, you can't relieve it before. It was Finance Act 2023, which commenced in 2024 year of assessment that say, henceforth, too, if you make a loss, you can relieve capital loss, but for maximum of 5 years. On the same asset, that is what the law is saying. On the same asset, you cannot relieve it against any other assets. Do you understand?
Yes,
Do you
sir.
understand?
Yes, sir.
Let me give an example. I want to set an example. Example. Tolani Limited. Tolani Limited. Dispose a motor vehicle. A motor vehicle at a sum of 1,700,000 in September 2025. September 18th, 2025. Full stop. The assets, the motor vehicle, was acquired originally at a cost of at a cost of 2,450,000. In 2026, the company disposed a plant. The company disposed a land, a vacant land. The company disposed a land in one of their branch, in one of its branch in Ogun State. At a sum of 64 million. At a sum of 64 million. And the estate agents charge 10% agency fee. The land was initially acquired at a sum of 25 million. And was fenced with a cost of 5,400,000. Lastly, in 2000 . in 2028. 2028. Tolani Limited dispose another motor vehicle. Another motor vehicle. Another motor vehicle at a sum of $4,300,000. At a sum of $4,300,000. A sum of $300,000. Which sorry for that. Required. We are done now. Required. Required. Compute the capital gain tax. Required. Compute the capital gain tax. Compute the capital gain tax. Due for relevant tax year. Due for relevant tax year. Thank you. Sorry for the delay. So now, if we want to solve this question, first and foremost, in 2025, they disposed that motor vehicle, 1.7 million. The motor vehicle originally cost what? 2,450,000. So let's go and use Excel to solve it so that we can understand. After that, we are moving to rollover again. So the company name, Tolani Limited. Tolani Limited. We are asked to compute computation of CGT, capital gain tax. So the question said for the relevant year of assessment. The year that the disposal is taking place, that is the year of assessment. Firstly, the first disposal for what year of assessment? 2020 what? 2025 year of assessment. That is the first disposal. For the 2025 year of assessment, we have disposal of, which asset do we dispose? Disposal of
motor vehicle.
MV. Let me abbreviate it. Motor vehicle. Disposal of MV. Motor vehicle. So that is the first year, disposal of motor vehicle. What is the sales proceed?
17.
How much the motor vehicle was?
1,700,000.
17. Thank you. 1,700,000. Less cost of what? Acquisition. Less cost of acquisition. How much will be the cost of acquisition? Is it 2,450,000? Let me check.
1,250,000. 2,250,000.
How much is the cost? 2,450,000. Can we see that?
450.
2,450,000. Yes, sir.
Yes, sir.
Okay, let me go to the Excel back. 2,450,000. So are we having capital gain or capital loss?
Capital loss
Capital loss.
of 750.
Capital loss of how much?
750.
750. In that year, our CGT at 10%. Will be what?
75,000.
Nil.
Okay, sorry.
You have to show them that CGT is because they asked you to compute capital gain tax. You have to show them that in that year your CGT is how much? 75,000. Abi? Correct.
No.
Do you understand?
Yes,
After
sir.
this, you now said capital loss. Capital loss carry what?
Forward.
How much capital loss am I carrying forward? 750. Do you understand?
Mm.
Yes.
So that is the first year of assessment. Another year of assessment. Another year of assessment still on this same Tolani, which year is that?
2026.
2026. What happened in 2026?
Okay.
They
Land.
dispose what?
Land.
Land. Capital loss carry forward. This capital loss carry forward, you put MV. You should know. You should specify it. And what?
Yes,
Motor vehicle. Do you understand?
sir.
In 2026, what do we dispose? Land.
Land.
Abi?
Mm.
So for the disposal of the land, how much is the sales proceed on the disposal of the land? Let me take you to the question back so that some people you can see the question. The sales proceed. The land was disposed for how much?
64 million.
How much is the cost of acquisition?
5.4.
Oh yeah, so if I want to solve this land, I have to create 2 naira sign.
5 million. Mm.
Do you understand me? I have to create two naira sign. My naira sign have to be in 2 places. First, one year, another 1 year. Do you understand? The sales proceed is 64 million, Abi.
Yes, sir.
Yes, sir.
When you sell an asset, agency fee, you should remember, is part of the selling cost, Abi.
Yeah.
How much is the agency fee?
6.4.
10%. The question said 10%.
10%, that's 6.4.
6.4. Are we adding the agency fee to sales proceed, or we are lessing?
We're lessing.
I want to ask. So please take note. Our net sales proceed will be how much? How much will be your net sales proceed? This minus this, Abi? 57.
Yes.
Can we all see that?
No.
Huh?
We are still on the
We are still
question,
in the
place, sir. You did
question.
not cut off to the question.
Oh, on the question.
Mm.
Oh, sorry. We are on the Excel now.
Yes, we are there.
Sales proceed 64. Agency fee 6.4, Abi?
Yes,
Your
sir.
net sales
Yes, sir.
proceed is how much?
57.
57.
Oh, I thought so your cost of acquisition. In your cost of acquisition, let's go and read the question very well. Let me take you to the question again. So how much will be our cost of acquisition? 25 million, Abi?
Yes, sir.
5 million. Plus 5.4. Fence with a cost of
Purchase price, purchase cost. If I want to do cost of acquisition, I will say purchase cost.
Mm.
Purchase cost is how much?
25 million. 25 million.
25 million. Fencing cost,
Development. Fencing cost
which
for
is
development was
renovation.
5.4.
5.4.
Fencing cost. You know, if they didn't fence the land, the buyer will not pay that amount. Abi,
Yeah.
do you understand? It's
Yes,
part
sir.
of the
Yes,
cost of
sir.
acquisition too, which is how much?
5 million
5.4.
400.
5.4. So plus the two together.
30.4. 30.4.
30.4.
So this 30.4, we less it from the net sales proceed. What will be our capital
Take us to
gain?
the. We're still on the question, sir. Not at the Excel.
Oh, you are still on the. Oh, sorry.
No problem.
Can we see it?
Yes, sir.
Can you see the Excel now? You can
Yes,
see
sir.
how I get my cost of acquisition. I will less it from where?
From the net sale process.
So what will be my capital gain?
27,200 million.
27,200 million. So my CGT, capital gain, at 10%, Abi?
Yes, sir.
That will give us
2.72.
how much?
2,072,000. 2,072,000.
2,072,000. That is the capital gain tax the company will pay in 2026. That 2026 again, do you understand? You will
Yes, sir.
capital what?
Loss.
Loss.
Brought
Carry
forward.
what?
Carry forward.
Carry forward. How much capital loss I'm still going to carry forward?
750,000.
75.
750,000. It's
Yeah.
750,000. If you check 2025, this is
Yes, sir.
2025. 750. Abi?
Yes, sir.
Yes, sir.
But in front of it, you must specify the asset. MV.
Motorbike.
You understand? Because
Yes,
it's
sir.
the
Yes,
same
sir.
class of asset, we can remove the capital loss. Assuming it's not the same class of the asset, we will have removed it in 2026, Abi.
Yeah.
So last year, the last year is 2020 what? 2028 year of assessment. What happened in 2028 year of assessment? What happened in 2028 year of assessment?
The sports vehicle, motor vehicle.
Motor vehicle. So for the motor vehicle that was disposed, how much? How much was it disposed? I will share the question now. Sorry. Let me just arrange myself. How much is the motor vehicle? Let me share the question. Lastly, in 2028, Tolani disposed another motor vehicle. For how much? Good evening.
4.3.
For the sum of 3. What is the cost?
2.5.
2.5.
2.5. 4 point what?
3.
4.3, Abi.
Yes, sir.
Why the
Yeah.
cost? 2 point what?
5.
Right. 5.
So the capital gain will be what? Let's
1.3.
remember to put this on in brackets. 1.8, Abi. Eh?
Yes, sir. Yes, sir.
But before this man pay tax on this, you will now set capital loss. Carry forward, Abi.
Yeah.
Brought forward. Because we want to relieve it now. Brought forward, Abi. You are bringing it forward to this year.
Please, return us to the Excel.
Oh God, I'm sorry. Oh. Are you in the Excel now?
Thank you, sir. Yes, sir.
Sir.
Thank you.
Can you see the 2028?
Yes, sir.
Capital gain 1.8, Abi.
Mm.
Capital loss brought forward. That is what you rewrite, Abi. You don't need to write carry forward.
Yes,
you are
sir.
not taking it forward to other year, Abi.
Yes, sir.
Yes, sir.
So you now said capital loss
Relief.
relieved. How much am I going to relieve? My capital gain, is it going to absorb all the loss?
Yes, sir.
Yes, I can relieve everything.
7.
I will relieve everything. So you need to let the examiner know. Capital loss carry forward. You need to let the examiner know for you to earn a good mark. How much will be my capital loss carry forward?
Nil.
So let the examiner know that. Nil. Do you understand? Nil.
Yes, sir.
Yes, sir.
So next thing you need to let the examiner know. Net what?
Capital gain.
Net capital gain. How much will be my net capital gain?
1050. 1.50,000.
So on this net capital gain, that is what the company will pay CGT on. Do you understand? CGT,
Yes, sir.
10%.
105,000. 105,000.
Giving us 105,000. Do we understand?
Yes, sir.
Do we understand this question?
Very well.
So that is that. So I will share the Excel with you. I will solve it well. I will share it with you. Don't worry. So let's go back to the word. Maris, what is your question?
Okay, sir, thank you very much for the solution. But my question is the year of assessment. I thought it's going to be preceding year basis.
When I was talking of basis of assessment of capital loss, capital gain tax, how capital gain tax is assessed to tax? Did I mention it in my last class or I did not mention it? Who can remind us what I said on basis of assessment of capital gain tax? Is it on actual year basis or preceding year basis?
It's on actual year basis.
Actual year basis. Capital gain tax is assessed to tax on actual year basis.
Okay, thank you.
Actual year basis. I mentioned it in the, you understand? So filing of capital gain tax return. How do we file the capital gain tax return? Let's do a recap. Who can remind us?
I think it's
Filing of capital gain tax return.
I think it's every 6 months. So
Capital gain tax return is filed how many times in a year?
twice.
Twice.
2 times a year, sir.
For a transaction that starts from 1st of January up to 30th of June, the capital gain tax return must be filed when? 30th
by or before 30th of June. By or before 30th of June.
From 1st of July to 31st of December, uncle.
That is by or before 31st of December.
So that is that. So I'm clear with that. So let's now look at another area. The last area we want to look at that is very important to us. That is where most of time, if they want to set question on capital gain tax, you should have it in mind. You can see that I'm spending a lot of time on capital gain tax because either we like it or not, 15-mark question normally come out on capital gain tax. Like I always tell my students, for you to pass an advanced tax has 2 legs. Advanced tax have how many legs? 2 legs.
2 legs.
The number 1 leg of advanced tax is hydrocarbon tax and PPT. Hydrocarbon tax and what?
PPT.
PPT. You know the meaning of PPT now?
Yes, sir.
Petroleum profit tax.
Profit tax.
Which my colleague is the one that will take you hydrocarbon tax and petroleum profit tax. That one, at least 20-mark question will come out from that area, or 25 mark. Another one that every year I can set question is capital gain tax. 15 mark. Go and check all the year. Question must come out on capital gain tax. 15 mark.
Sir, I have a comment, sir.
Yes.
Okay, I noticed that this capital gain tax is usually coming in different format, different forms.
Yes. So now the main most of the year that I can cite question on capital gain tax, the area that they normally ask question is this area of rollover relief. We have to be serious about this next area. Rollover what? Rollover relief. That is the next area we are looking at on this capital gain tax. Rollover relief. Most of the questions that ICAN will set on capital gain tax, most of them normally come from rollover relief. What is rollover relief? Rollover relief is relief granted where assets of a particular class are disposed and the sales proceeds from such disposal is reinvested in the acquisition of new assets of the same class. Let me repeat myself again. Rollover relief is a relief granted where assets of a particular class are what? are disposed and the sales proceed from such disposal is reinvested in the acquisition of what? New asset of the same class. Let me now explain. What rollover relief simply deal with is, I dispose a land. I dispose a land for 200 million. That land, I bought it 50 million. I dispose it 200 million. How much is my capital gain? I disposed the land 200 million. The land, I initially bought it 50 million. So how much is my capital gain?
150 million.
150 million. That means I'm supposed to pay capital gain tax of 15 million. Abi?
10 million.
10% of 15 million, 150. That is 15 million. Abi?
Yes.
But
Yeah.
if I want to do a tax planning that I don't want to pay that capital gain tax, do you know what I will do? I can defer that capital gain tax. What I will do is I will reinvest the sales proceeds. That 200 million that I used to dispose that land, what I will do if I don't want to pay capital gain tax, I will go and use it to acquire another land. Once I use it to acquire another land, I will not pay capital gain tax. For me to acquire another land, that means I have done rollover. Good evening. I have done rollover. If I acquire another land, I have done rollover relief. I've already deferred the capital gain tax to a future period. That 15 million that I'm supposed to pay now, I will not pay it now until I dispose the new land I just bought. Let me repeat myself again. What rollover relief means is when you sell an old asset, the sales proceeds of that old asset, you now use it to acquire a new asset. By virtue of that, if you make gain on that old asset, you will not pay capital gain tax on it. Do you understand? The capital gain tax you're supposed to pay on the old asset, you will finally pay it when you dispose the new asset. Asset of the same class. Asset of what?
Same class.
You must use the word the same what? Class. You cannot dispose a land. You now use it to acquire motor vehicle. Can you claim rollover on it?
No.
No, they are not the same class. When you dispose a land, that sales proceed, you must use it to buy another land. That is what rollover means. Now, what are the classes of assets according to the Capital Gain Tax Act? What are those assets that you can claim rollover on? You should know it is not all the assets rollover apply to. You understand? It is stated in the Capital Gain Tax Act, those assets that rollover relief can apply to. They call it class of assets. Class 1 of the assets that rollover relief apply to, land and building. Class 1 have A and B. Class 1A, land and building. When you dispose land, you can use the sales proceeds to acquire another land. And you claim rollover. Please, mute your audio. Class 2, Class 1B, plant and machinery. Generator, plant and machinery. Equipment. When you dispose them, if we buy another plant and machinery, you can claim rollover relief on such asset. Class 2 assets that rollover relief apply to, according to the capital gain tax law: ship or vessel. Ship or vessel. Class 3, aircraft. Class 4, goodwill. While class 5, stock and shares. Class 5 is what? Stock and shares. Like I said when I was doing introduction, if you dispose a stock or share that the value is more than 150 million, if you don't want to pay capital gain tax, what the law says is you should reinvest it. If you reinvest that amount, you will not pay capital gain tax. You will defer the capital gain tax. And we should know any stock and shares that the value is less than 150 million, such stock and share is not subjected to capital gain tax. So these are the class of assets that rollover relief are available. We have class 1 to how many? To 5. Class 1 to 5. Let's know the class of assets. In all these class, do we have motor vehicle on it?
No, sir.
No.
No. So have it in mind. Rollover relief does not apply to motor vehicle. Furniture and fitting. Do we have furniture and fitting?
No, sir.
No. Have it in mind. Rollover relief does not apply to furniture and fitting. So now, condition for granting rollover relief. If you want to grant a rollover relief, what condition for tax authority to grant a taxpayer a rollover relief? What is the condition for tax authority to grant a taxpayer a rollover relief? Number 1 condition is the asset on which rollover relief is to be granted must fall in the class of assets for which rollover relief is available. What does this number 1 mean? Who can explain it better?
It must be fall within the categories of the asset from number 1 to 5.
From class 1 to
5.
Number 2, the proceeds from the sale of the asset must be reinvested in the acquisition of what? Asset of the same what?
Class.
In the same what? In
Class.
the same class. What does this one mean? What does this one mean? Explain to me. Who can explain this?
A proceed from
It
sales
means
of
that
land and building must be reinvested in acquisition of land and building. You cannot reinvest in the
Thank you very
building
much,
in
my
the
friend. Yes.
plant and
So
machinery.
the sales proceed of land and building must be used to acquire a new land and building, the same class of assets. When you dispose land and building, that sales proceed, you must reinvest it in the acquisition of new land and building. The relief is available, provided that the amount reinvested exceed the original cost of acquisition of the asset disposed. What this one is saying is that the cost of acquisition of new assets, that new asset you want to buy, that is the amount reinvested. That is the cost of acquisition of new asset. It must be more than the original cost of acquisition of the old assets. Let me explain. I dispose a land. That land that I disposed it 200 million. I bought the land on 80 million. Do you understand me? I bought the land 80 million. I now dispose it 200 million. I now want to buy another land. I now buy another land for 70 million. I buy another land for 70 million. If I buy another land for 70 million, I cannot claim rollover relief. Why? Why?
Because you did not use
I will not claim rollover relief.
person.
Because the cost, the amount I reinvest, the amount reinvested, which is the cost of acquisition of the new asset, is less than what? Is less than 80 million. 80 million is the cost of acquisition of what?
Old asset.
Old assets. So the condition for claiming rollover relief is the amount you want to reinvest, the cost of acquisition of the new assets, which is the amount reinvested, must be more than the original cost of acquisition of the old assets. And another condition, the assets, the rollover relief must be claimed within 12 months, a year after the disposal of the old assets. You must apply for rollover relief. You must reinvest, you must buy another asset within 12 months after you have disposed the old assets. If you buy another asset after 12 months, you will not claim rollover relief. When you dispose an asset now, that sales proceed, you must reinvest it within 12 months after the date of disposal. Do you understand? Do you understand?
Yes.
The last condition, when an asset is lost or destroyed, an asset is lost or destroyed, you now receive a compensation. That compensation you receive by way of insurance policy or under insurance policy, that compensation you receive under insurance policy, that compensation you receive under insurance policy by way of capital sum, you must use that compensation within 3 years. In the case of any asset that was lost or destroyed, they now give you compensation. And the compensation you receive is more than the cost of acquisition of the asset. That compensation that you receive, you must use it to purchase another asset within 3 years so that you can replace the asset lost or destroyed. These are the conditions for granting rollover relief. Now, what are the type of rollover relief that we have? Type of rollover relief.
Excuse me, sir, can you repeat that sentence again? You said when capital sum is paid by insurance company.
When an asset is lost or destroyed, but compensation is received under policy of insurance by way of capital sum, you insure your asset. Take for instance, what that one is saying is you insured your land, your building. Fire incident now happened that destroyed the building. Insurance company now pay you compensation. Assuming the building, before the building was destroyed as a result of fire, if the building, you acquire the building 20 million, when insurance want to pay you compensation, they pay you 50 million. Indirectly, you have made capital gain.
Yes.
That 50 million paid to you, If you don't want to pay capital gain tax on it, you must reinvest it to buy another building to replace the building loss within how many years?
In 3 years.
Within 3 years. That is when you can claim rollover. If you don't use that money within 3 years, tax authority will ask you to come and pay tax on that compensation that you receive. Now, type of rollover. Type of rollover. We have 3 types of rollover relief. We have 3 types of rollover relief. Rollover relief, we have 3 types. We have full rollover relief. We have partial rollover relief. And we have nil rollover relief. Let me repeat myself again. We have 3 types of rollover relief. Full rollover relief, partial rollover relief, while the last one, nil rollover relief. What is full rollover relief? What is full rollover relief? Full rollover relief arises where the sales proceeds from the old asset is fully spent in acquisition of the new one. Full rollover relief is available where the sales proceeds from the old asset is fully spent in acquiring the new one. What does full rollover relief simply mean? It means where the amount invested, the amount that was reinvested in acquisition of new assets is higher than sales proceeds of the old assets and the cost of acquisition of the old assets. In full rollover relief, the amount that was reinvested in acquisition of new assets is higher than sales proceeds of the old asset and the cost of acquisition of the old assets. Partial rollover relief. Partial rollover relief simply means the amount that was reinvested in the acquisition of new assets is less than the sales proceeds of the old asset, but higher than cost of acquisition of the old asset. Let me repeat myself again. Partial rollover relief simply means the amount reinvested in the acquisition of new assets is lower than sales proceeds of the old assets, but higher than cost of acquisition of the old assets. Indirectly, in partial rollover relief, the sales proceeds of the old assets is more than cost of acquisition of the new assets. Cost of acquisition of the new asset means the amount invested. So when you look at it, the amount invested is in the acquisition of new assets is lower than sales proceeds of the old asset, but higher than cost of acquisition of the old assets. For nil rollover relief, for nil rollover relief. Nil rollover relief simply means a situation where the amount that was reinvested in the acquisition of new assets is lower than the sales proceeds of the old asset, also lower than cost of acquisition of the old assets. Under nil rollover relief, the amount that was reinvested in the acquisition of new assets is lower than sales proceeds of the old assets and also lower than cost of acquisition of the old asset. Now, I want to ask a question. Land and building. Let me go to my Excel. I want to give an illustration in an Excel. You will now tell me what type of rollover relief is this. Look at it. Land and building. Land. Sales proceed of that old land. Sales proceed of the old land. Sales proceed of the old land. Old is 2 million. Cost of acquisition of the old land. Cost of acquisition of the old land is 700. Amount reinvested. Amount reinvested. Amount reinvested. Another name for amount reinvested is what? Who can tell me another name for it?
Amount invested is the
Cost of acquisition.
Cost of acquisition of what?
of new
Land.
assets.
New asset.
New asset. Do you understand? I want you to understand that is the reason why I do it like this, so that you can have it in your mind. Another name for amount invested means cost of acquisition. So in this situation, the amount invested was 900,000. 900,000. What type of rollover is this?
This is partial.
What type of rollover is this?
Partial.
Any other idea? Let me repeat myself again. We have 3 types of rollover relief.
Yes,
Full
sir.
rollover relief, partial rollover relief, and what?
And nil.
Rollover relief.
Starting from food. Starting from food. If you want to define food, don't look at my own write-up. Define it as I say it. Full rollover relief is available where the amount reinvested is higher than what?
Cost of acquisition.
The
higher
cost of
than-
acquisition of all assets.
Where the amount reinvested in full rollover relief, you will say full rollover relief is available where the amount reinvested in acquisition of new assets, Abi, is higher
Yes, sir.
than sales proceed of the old asset and cost of acquisition of the old asset.
Yes.
Yes.
That is full. Partial
Yes.
is available where the amount reinvested in the acquisition of new assets is less than sales proceed of the old asset, Abi,
Yes, sir.
but
But it's
higher
more
than
than
what?
the
But
cost
more
of
than what?
acquisition of all assets.
It's the
Old
acquisition of old
assets.
assets.
Nil rollover relief simply means it's available where the amount reinvested in the acquisition of new assets is less than both sales proceeds of the old assets
and
and cost of acquisition of what? Of the old assets. So, ladies and gentlemen, what type of rollover is this?
Partial.
Partial rollover.
Partial rollover.
Why is it partial?
Yes,
because look at the amount invested. It's less than what?
Less than the sell proceeds.
But higher than what?
Higher than
cost of acquisition of all assets.
So what if this is 600,000? Who can tell me?
That's nil rollover. Nil rollover.
Nil rollover.
Yes.
Okay, I know what I would do. I know what I would do. I know what I would do. Okay, this is 3 million. This is 3 million. 3.1 million. What type of rollover is this?
It's still nil rollover.
Nil.
Why is it nil?
Because the cost of acquisition of the new assets
is lower than both.
Okay, I know what I would do. I know what I would do again. 6 million.
Excuse sir. Excuse
6 million. I know. Yes. 6 million.
In this, there's no
gain.
There's
There is
no
capital loss.
There's no gain. There's no gain. There's a capital loss.
I know. Why this one? Let me put this on. 800,000. What type of rollover is this? Please, another person should talk. What type of rollover is this? This is what? Who can tell me? This is full rollover, Abi?
Yes, sir.
Full. Because the amount invested is greater than the sales proceeds of the old assets. It's also greater than cost of acquisition of the old assets. Please, we should know the type of. In full rollover, let me explain something. In full rollover, you will defer all the capital gain tax. You will not pay capital gain tax now. All the capital gain tax will be deferred to future period. In partial, you will pay part of the capital gain tax now. Part of it will be deferred to future period. But in nil rollover, you will not defer any capital gain tax. So, despite you reinvest it, you will pay part of it. You will pay all the capital gain tax now. Do you understand?
Yes.
Yes, sir.
Do you understand?
Yes.
No.
So repeat, please.
I said in full rollover, you will not pay capital gain tax now. All the capital gain tax will be deferred to future period. But in partial, part of the capital gain tax will be paid now. Why part will be what? Deferred.
Rollover.
Yes. But in nil rollover, you will not roll over any capital gain tax. All the capital gain tax due on that old asset, you are going to pay it now. Rollover relief, you will not roll over in nil. Do you understand?
Yes, sir.
So what we have left is for us to solve question. Can we postpone the question to the next lecture, or we should solve one question now?
Let's solve one. Next.
Okay. So I don't want, your people in the last orientation. I don't know whether it's this man that is asking questions that complained that I normally use new tax law. Who made that complaint? They said I'm using new tax law.
But sir, you have already categorized that you are doing that to help us because you know what can happen.
Yes. So that you can use the way that person asked that question. I'm not
why student will complain again?
So, but let's
Well,
leave
that's
that. Everybody have their right to come. You understand? So but the person would have messaged me.
My advice is that as a judge, do what is right. Do what you know is best for us.
Yes.
Simple.
Oh, no problem. So we are all together. So let's look at one question, which is this examinable question 1. Let's look at it. Examinable question 1. Somebody should read the question.
Take us to the question, sir.
Okay. I'm in Excel. Okay, don't let us do this question 1. This question 1 will take our time. So I don't want us to waste time, so that by next lecture we solve this question 1, and we are moving to a new topic in our next lecture. So, but if time permits us on Sunday, we may finish capital gain tax. We'll solve like 2 more questions on Sunday, so that when we meet on Thursday, Sunday night, if we have free period on Sunday night, we can meet for 1 hour. We solve the remaining question on capital gain tax, so that on Thursday we meet, we are starting a fresh topic. Do we understand?
Yes.
Yes, sir.
So please, on Sunday, from 9 o'clock to 10, we have lecture to solve the remaining capital gain tax question. Because this night I only solve 1 question. I still have like 2 more questions on rollover relief to solve. I will only solve 1 question this night. So this question 2, let's solve question 2. Bolu Nigeria Limited. Somebody should help us read.
Sorry, I think I missed some part of the class. Are we meeting on Sunday? What time?
By 9 p.m. because I always lecture in our VI center. So I end my lecture on Sunday by 7 p.m. So by 8, I will be at home. But let's start by 9 to 10, 1 hour lecture. It won't be more than 1 hour on Sunday. Please, I will send message to the group now. Sunday, 9 to 10. 9 to 10.
Okay, that's
so
fine.
Let's read this question 2. Oh yeah, Bolu Nigeria Limited.
Bolu Nigeria Limited disposed of its building located in Ifo for 177,750,000 on 7 September 2006. The building was constructed at a cost of 44,500,000 in 2019. Advertisement cost paid for disposal was 2,800,000. The company acquired a building at a cost of 66,410,000. 66,410,000, yes, on 16 September 2006. The lawyer commissioned for the acquisition of the new building amounted to 3,800,000. Require compute the capital gain tax due.
Okay, looking at this question, how do you know it's a rollover relief question? How do you know it's a rollover relief question? Because they dispose a building. They later tell us that the company acquired what? A new what?
Building.
Building. After they dispose the old building, they now acquire a new building. When you see that, you should know, this is a rollover. This is a rollover relief question. Do you understand? Second question is, what type of rollover relief is this? So that I know whether I will pay capital gain tax or I will not pay. We are still going to solve the question. But what type of rollover relief is this? How much is the new building that was acquired?
3.8.
That is lawyer commission.
66,400,000.
63,400,000 plus when you acquire building, the lawyer commission you pay at the acquisition, you add it to the Abi? Plus what?
3.8. 3 million. 3 million.
Plus 3.8. That is how
Yes.
much? That is how much?
Mm.
66,400,000 plus 3.8. That is how much?
70.210.
So when you compare it with the sales proceed, what type of rollover is that? What type of rollover? It's partial rollover because the amount reinvested is less than the sales proceed of the old asset. How much is the sales proceed of the old asset?
177.
So it's partial.
0.70.
So let's go and solve the question. For us to solve the question now, sales proceed of the old asset, 177,750,000. When the old asset was sold, they incurred selling costs. What is the selling cost that was incurred?
Advertisement.
Advertisement cost was paid for disposal. Somebody, when we dispose the asset, we pay advertisement cost. What do we do to that advertisement cost?
Less from the
From where?
From sell proceed, from disposal amount.
From the sales proceed. 177,750,000 minus 2.8. We will get a net sales proceed of how much? 174,950. Cost of acquisition of the old asset, how much? How much the old asset? That old land, how much was originally acquired?
44.5.
So when you let it from the net sales proceed, how much is your capital gain?
130.
130,450,000.
Mm.
You're supposed to pay capital gain tax on this, 10%, Abi? But you now apply the rule of rollover. You apply the rule of rollover. You now say, how much out of this 130,450,000, how much am I going to roll over from it? For you to know the amount you are going to roll over from it, for you to get your rollover amount from this 130,450,000, for you to get your rollover amount. If you want to get your rollover amount reinvested, rollover amount is lower of, you compare the lower of amount reinvested with the sales proceed. How much is the amount reinvested? How much is the total amount reinvested? 70,210,000. Abi?
Yes, sir.
Yes, sir.
Because you plus the 3.8 to it. You compare it with net sales proceed. Your net sales proceed is 174,950,000. Between net sales proceed and amount reinvested, which one is lower?
70-10.
70-10. You take it to this side. Since it's the one lower. From this 70-10, you now less cost of acquisition of the old assets from it. You less cost of acquisition of the old asset from it. That means If he less cost of acquisition of the old asset from it, that means amount rollover amount is going to be 25,710,000. That is your rollover amount. That 25,710,000, you will now come and minus it from the capital gain. How much is the capital gain in the question?
130.
130,450. If you minus 25,710,000 from 130,450, what will be your net capital gain?
104.
This one, net capital gain, which is, I call it balance liable to capital gain tax. Or you can put or net capital gain. Net capital gain. How much is your net capital gain?
104.
104,710. It is this your net capital gain that you pay capital gain tax on. Capital gain tax of 10%. 10%. 10%. Capital gain tax of 10%.
104,000.
That is 10 million. 10 million.
474.
Abi?
Yes, sir.
That is the capital gain tax you pay. Because it's partial, that is when you are paying part of the capital gain tax. How much was deferred from the capital gain? How much was rollover? How much was rollover from the capital gain? 25,710,000 was the amount rollover. Part of the capital gain we due for capital gain tax under partial. Why part of the capital gain will be rollover? I'm saying part of this 130,450,000 will be rollover. Part we due for capital gain. In capital gain, rollover relief, the challenge is how do you get the amount rollover? If you want to get the amount rollover, first you compare amount reinvested with the net sales proceed. You take the lower one. In this question, the amount reinvested, the total is 70,210,000. Why the net sales proceed is 174,950,000. Which one is lower between the two?
70.
70, that is your amount reinvested. It is from there. You will now less anyone you take between the two. You will less your cost of acquisition of the old asset from it. When you less your cost of acquisition of the old asset from it, the balance that will give you 25,710,000. That is this one that is called the rollover amount. That is amount rollover or capital gain rollover. This rollover amount, you will now minus it from the capital gain at the beginning, at the up. Capital gain, which is this. You minus it. When you minus it from it, you will get your net capital gain. When you get your net capital gain, you apply your 10% on it. Do you understand?
Yes, sir.
So, ladies and gentlemen, this is where we are going to stop this night. Please, on Sunday, there will be class 9 to 10. I have 2 more solid questions on rollover relief that I need to solve. So I will use Sunday to solve it. Please. In the evening on Sunday, you don't normally have to, any course now, Abi?
Yes.
So please, 9 to 10, I will talk to admin. They will send the link. So please, let's just take the sacrifice so that we can come out on flying color. So by next week, I will start a new topic fresh. So thank you for having me. Do we have any question?